Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Nirmal Daria. We have with us Kunal Shah, Head of Commodities Research, joining in. Kunal, welcome to the show. Kunal, what would you recommend today to do with the dollar index firstly?
Yeah, in line with my Friday's recommendation, I think the dollar index is going to move up further. It is already at 92.21. Okay, so I'm expecting this appreciating trend to continue because we have seen US job data, we have seen US stimulus, everything has come. So there are no surprises left in the market, and it seems that the inflation is on the up move. Oil is Brent crude oil is at $72. So whenever this kind of scenario happens, the inflationary expectation moves up. So the bond yields moves up, and you saw today US 10-year bond yield at 1.61 right now, and that has led to again sell off in the commodity market except in crude oil. I'll come to that later, but it seems that the USD INR pair is likely to inch up, and I recommend to go long in the pair. You can carry forward the long also. Tomorrow morning it can open up at around 73.60, 73.75, and it seems that the doors for the 74 are open right now. So I think going long is recommended during today's session.
Right. And with that, if you see in terms of gold and silver as well, gold has recovered from the 9-month low. And clearly, if you go to see after a huge fall, are you expecting this to continue? Because a stronger than expected US non-farm roll data is something which has helped gold recover somewhat.
So on Friday, the US job data was bearish for gold, but gold moved up because there was too much pessimism in the market. At 44,000, I don't feel like going positionally short in gold. These are not the levels where I would say that 41,000, it will become 41,000, 40,000. Doesn't look like that. But
Hmm.
at the same time, when the dollar index starts moving up, when the bond yields start moving up, so you see some pressure. So in today's session, I think that around 44,500 to 44,550 maximum upside can be seen. I recommend to go short around those levels because of the dollar index, and one should cover the short position around 44,250 to 44,200. Similar view with the silver. Silver also I'm recommending to go short around 66,300 to 350. On the downside, it can test 65,700 to 65,600. And same view in line with gold and silver. When dollar index, moves the way it has moved up right now, 92.21, I don't think that gold and silver can immediately shoot up until we have a major geopolitical news. So if
Hmm.
Saudi retaliates to Iran and there is a major geopolitical conflict, then I think it can shoot up. We should see because it seems that Saudi's biggest and the best refinery was under attack today morning, and that has led to upside in oil futures. But if the geopolitical tension escalates from here, then you can see gold moving or silver moving up. Till then, I'm not expecting, the way bond yields and dollar index are up, there is a very little chance in today's evening session for gold and silver to rally.
Right. And with this, on the back of the news that you told us about oil as well, we've moved past the $70 per barrel mark. Do you think this is a temporary up move that we are seeing, or are you expecting this uptrend to continue?
Absolutely temporary move because whenever this kind of drone attack takes place, there is no news of major drop in production. So 2-3 million barrels of oil is not is affected. That kind of news, if it would have been there, then it would have lasting impact. But I think in next 2 to 3 days, this will fizzle out. A maximum 2 days from here. It's not going to move up because of this reason. Right now, oil futures are moving up because of the supply is really on the short side
Hmm.
and the demand is picking up. So today's session it can move up, but I'm not recommending to aggressively for trading. You can go long. I'll give you the levels because even the rising bond yields will have a negative impact on crude oil futures also,
Hmm.
like commodities. So I think 68 40 is the level you can go long. 68 85 to 68 90 are the levels where you should book your profit. and stop loss should be placed around 48.10.
Right. Apart from that, you have base metal prices that have been weaker, at least on LME. Whereas if you see in terms of Shanghai futures, we saw them to be strong on that front. With that, you have United States, which has passed a $1.9 trillion stimulus bill as well. How do you think this is going to augur for the base metals world? And with this, another news that has come in is where Indonesia is considering lowering royalty for low-grade nickel ores. So what impact do we see on nickel as well?
I think right now, in most of the metals, the upside seems to be capped. We've seen a major fall, and on Friday, unbelievable recovery. I think this kind of wild swings are going to take place at such high levels. But on the upside, I'm of the view that in near term, the upside will be capped because of the stronger dollar. So copper around 6. I'll give you all the levels of metals where you can trade. Copper around 686. You can go short, put a strict stop loss of 688, 690, and expect it to go down to again 674 to 672. Nickel also, forget about all bullish news. The major reason is the restart of the production from the Russia's second largest nickel mine. The expectations are building around. So 1190, 1195, I would, these are the range I would go short. I would put a stop loss of around 1208 and expect it to go down to levels of 1165 to 1170. So most of the metals we've seen rally today. Part of the rally today is because of the weaker rupee, but I think sell on rise should be the strategy considering the dollar index is strong.
Right. So that's with regards to our base metals are concerned, and there are no questions coming in for the session.
One more thing I would like to mention. Today, Chinese yuan is depreciated to the lows of December. So this is also a slight bit of negative for commodity prices. So adding to what I said, and it remains to be seen whether. So again, I am saying everyone to please have a look at the investing.com and have a look at US 10-year bond yields. So for example, due to any reason, the bond yields drop by 7 pips, 8 pips, then the entire view will, change. So this is as per the current situation. I know these are the most volatile times. Do not leverage in such kind of market. Trade with a strict stop loss and put a deep stop loss.
Right. So that's the view coming in with regards to where the commodity section is concerned. I think there are no questions coming up as well. Thank you, Kunal. Thank you, participants, for joining in.